Welcome back to Dinar Community Channel. The global financial landscape has been shaken by a monumental event that many long believed was impossible, or at least improbable. The revaluation of the Iraqi dinar has officially taken place, triggering a wave of economic activity, market adjustments, and personal transformations across the world. For decades, investors speculated about the possibility of Iraq restoring its currency to a stronger international value, but most outside the dinar community dismissed it as wishful thinking. Now, with the event confirmed and unfolding in real time, the world is witnessing the largest wealth shift in modern history, and the rush to capitalize on it has begun. The dinar revaluation is not simply a local adjustment to Iraq's economic policies. It is a globally coordinated event that has reverberated through banking systems, financial markets, and international trade. At the heart of this event is the sudden recalibration of wealth. Ordinary citizens who held onto dinar notes purchased for pennies on the dollar now find themselves holding fortunes. Financial institutions that had quietly prepared for this day are scrambling to keep up with an unprecedented wave of exchanges, deposits, and wire transfers. The event has been described as a financial earthquake, one that has rearranged the hierarchy of global wealth overnight. What makes this moment so extraordinary is not just the increase in the value of the Iraqi dinar itself, but the way it has triggered ripple effects across the global economic system. Banks in the United States, Europe, and the Middle East are operating under extreme pressure, with exchange centers overwhelmed by the volume of people rushing to redeem their currency. Reports of long lines forming outside major banks began circulating within hours of the announcement. Some branches extended hours, while others had to shut their doors temporarily to recalibrate systems and bring in additional staff. In countries with large dinar-holding communities, the situation resembles a financial gold rush. For investors who had waited years, sometimes decades, the reality of wealth transformation is sinking in. Stories are emerging of families paying off mortgages in a single afternoon, of entrepreneurs suddenly having the capital to fund long-dreamed-of businesses, and of communities seeing once ordinary neighbors become millionaires overnight. The atmosphere is electric with possibility, but also tinged with chaos as people scramble to understand the best way to manage their new wealth. Financial planners, wealth managers, and tax experts are reporting a flood of calls from newly wealthy individuals seeking urgent advice. The Iraqi government's role in this shift cannot be understated. After years of reconstruction, political reforms, and economic restructuring, Baghdad finally positioned itself to execute a revaluation that would restore credibility to the national currency and stabilize its economy on the international stage. By linking the new rate to a basket of strong global currencies and leveraging its massive oil and natural gas reserves, Iraq has been able to anchor the dinar at a level that reflects its true economic potential. This has not only restored confidence domestically but has also positioned Iraq as a major financial player in the global arena. Globally, the revaluation has exposed deep divisions in financial preparedness. Some banks had quietly prepared for this moment, installing advanced software systems, training staff, and securing liquidity to handle the influx of currency exchanges. Others were caught off guard, scrambling to understand procedures and to verify the legitimacy of notes flooding into their branches. Regulators have had to step in swiftly to ensure compliance, prevent fraud, and maintain order in an environment that could easily spiral into confusion. International organizations such as the International Monetary Fund and the World Bank have been monitoring the situation closely, emphasizing the need for calm, order, and adherence to international standards. The most remarkable aspect of this event is the unprecedented shift in wealth distribution. For the first time in history, an entire class of ordinary people, many of whom purchased dinar with skepticism from their families and peers, have been thrust into positions of significant financial power. This is not the transfer of wealth from one elite class to another, it is the sudden creation of a new wealthy class across multiple countries. Unlike traditional financial booms, which concentrate wealth in the hands of corporate giants or established investors, the dinar revaluation has distributed wealth across a grassroots base of holders who entered the market with relatively small amounts of money. This grassroots empowerment is already reshaping communities. Nonprofit organizations are reporting spikes in donations as newly wealthy individuals channel a portion of their windfall toward charitable causes. Local businesses are experiencing surges in activity as people make long-delayed purchases, from cars to homes to education. Financial markets are bracing for new flows of capital as dinar holders diversify their newfound fortunes into stocks, bonds, cryptocurrencies, and real estate. The real estate sector in particular is expected to experience an extraordinary boom as many rush to invest in tangible assets. Yet with opportunity comes risk. Governments and financial advisors are warning dinar holders not to be reckless with their new fortunes. The sudden wealth effect can lead to poor decisions, opportunistic fraudsters, and short-sighted spending. Scammers are already attempting to exploit the situation, posing as bankers, advisors, or investment professionals promising unrealistic returns. Authorities are urging people to verify information carefully, rely only on trusted financial institutions, and think long-term about wealth preservation. History has shown that many lottery winners and sudden millionaires struggle to maintain their wealth over time. This event has the potential to create both long-lasting prosperity and tragic cautionary tales. On a geopolitical scale, the revaluation has also reshaped Iraq's position in the global economy. For years, the country's currency was seen as a symbol of instability, a reflection of decades of conflict and sanctions. The new valuation, however, signals that Iraq is ready to step into its role as a financially sovereign nation with the means to assert influence regionally and globally. Neighboring countries are recalibrating their trade and investment policies in response, while oil markets are closely watching how Iraq leverages its newfound financial strength. This event has strengthened alliances, shifted power balances, and forced global leaders to reassess economic strategies in the Middle East and beyond. The effect on the US dollar and other global currencies is being carefully monitored. While the dollar remains dominant, the sudden prominence of the dinar has introduced new variables into the currency market. Forex traders are reporting intense volatility as speculative activity surges. Some investors are using the opportunity to hedge their positions, while others are speculating aggressively on what this new development means for the global financial order. Analysts are divided. Some see the dinar's rise as a temporary spike that will eventually stabilize, while others argue it is the beginning of a long-term restructuring of currency values. One of the more unexpected outcomes of the dinar revaluation has been its cultural impact. Communities that once treated dinar holders as dreamers or conspiracy theorists are now seeing them celebrated as visionaries. Conversations about financial literacy, generational wealth, and global economics are taking place in living rooms, community centers, and online forums with a newfound urgency. The event has ignited debates about fairness, luck, and opportunity, with some arguing that this was a once-in-a-lifetime chance that rewards patience and faith, while others see it as an unfair windfall disconnected from effort or merit. Regardless of the perspective, the undeniable fact is that millions of lives have been transformed in an instant. The next phase of this wealth shift will depend largely on how governments, banks, and individuals navigate the transition. For governments, the priority will be to harness the positive potential of this event while minimizing instability. Tax systems will need to adapt to the influx of new wealth, while social systems may see shifts in demand as newly wealthy individuals invest in health care, education, and infrastructure. For banks, the challenge is managing liquidity, preventing fraud, and maintaining public trust during this historic moment. And for individuals, the task is to balance excitement with prudence, ensuring that sudden wealth becomes a foundation for long-term prosperity rather than a fleeting experience. The global rush is far from over. Exchange centers continue to report overwhelming demand, and many banks are operating on extended schedules to keep up. Financial advisors are scheduling back-to-back consultations, and real estate agents are reporting unprecedented levels of inquiries. Online platforms dedicated to wealth management are experiencing surges in traffic, as people search for reliable guidance on what to do next. The sense of urgency is palpable, as if the entire world is racing to secure its place in this new financial order. What sets this event apart from past financial shifts is its grassroots nature. Unlike stock market booms or technological revolutions that primarily benefit established investors or corporations, the dinar revaluation has empowered everyday people. Teachers, factory workers, retirees, veterans, and small business owners, people who were often dismissed when they spoke of the potential of the dinar, are now at the forefront of a new financial reality. This democratization of wealth has the potential to reshape not just economies, but also cultures, communities, and political landscapes. The true legacy of the dinar revaluation will not be measured in numbers alone. It will be measured in the stories of transformation, families breaking free from cycles of debt, communities revitalized by investment, and individuals discovering both the opportunities and responsibilities of sudden wealth. It will also be measured in the lessons learned, as both successes and mistakes shape the way future generations think about money, investment, and financial planning. In that sense, this moment is not just about Iraq or the dinar, it is about humanity's ongoing relationship with wealth, opportunity, and change. As the dust settles from the initial wave of excitement, the world will begin to see the contours of a new economic era. The global rush triggered by the Iraqi dinar's revaluation is not simply a fleeting frenzy, it is the beginning of a profound shift in how wealth is distributed, managed, and perceived. Whether this leads to greater prosperity and equity, or to new forms of imbalance and instability, will depend on the decisions made in the coming weeks, months, and years. What is certain is that the world will never look at Iraq, or the dinar, the same way again. The Iraqi dinar revaluation stands as a defining moment of this generation, one that will be studied by economists, historians, and sociologists for decades to come. It is a reminder that in an interconnected world, change can come from unexpected places, and that the dreams of the few can sometimes become the reality of the many. The global rush has begun, the wealth shift is underway, and humanity is witnessing history unfold in real time. Like and subscribe for more videos.